Welcome to Trading with Livevol. This is Stephen Choi. Today I'm going to actually combine the earnings report and Trading with Livevol. I have some guests. I think I'm only going to be able to do one recording. But this is where I trade my real Reg T account, and I use LVX to kind of show people how I use this product. So let's actually go to my account. I'm having, pretty flat day, maybe a little bit up. I did a couple of trades for earnings yesterday, and I'll show you guys and what happened. So it actually combining the earnings report and trading with Livevol actually makes sense today because I actually did a few earnings plays yesterday, 3 of them in fact. And I want to kind of show you guys what the results were. So let's actually go to them. Let me actually do historical trades, just so. All right, so let's go to the first one. Macy's had earnings. So if you guys heard me yesterday, the prior day I sold this strangle, May 60 55 strangle for 70 cents, expiring this week. And the reason I sold it was basically I felt like Macy's was one of the better retail companies, so I thought they were going to do okay, and then right, so they were going to do okay, and then basically bounce back right to the middle instead of being down here, which would have made me want to sell puts. But I went right here, so I felt comfortable actually selling the strangle within this the Bollinger Bands, roughly, whatever the one standard deviation is, and also by the fact that if you look at it, the volatility was pretty decent. It wasn't really high, but it was pretty decent, and I thought it wasn't going to move that much. So essentially, what I was betting on was that because most of the retailers are in, and I felt like Macy's, out of many of these retail groups who sometimes had really poor earnings, didn't really was one of the better ones, and also it was implying like a 4.3% move, and I didn't really feel like it was going to move that much, right? So that's why I sold the strangle. And there was no like huge order flow that was actually pointing to any kind of danger signs, so I felt comfortable selling that strangle. So 55.60, I would have lost if basically Macy's went above 60.70 or below 54.30. So in this instance, it worked out well. I'm trying to buy these back for a penny. I'm not sure if I'm going to get them. Sometimes I don't close, and it kind of comes back to get me. But in this instance, I'm not really as concerned about that, right? I also did a play in Deer. So Deer, I did this 1x2, where I bought one of the May 94 and sold 2 of the May 96, because a lot of these industrial companies seems like they did pretty well. Looks like they had some disappointing earnings, at least according to people who want to buy or sell stock. And so this one I closed for a penny. I was kind of hoping maybe I can sell this for a dime or something, but I wasn't able to get it off. So most likely I'm going to lose the whole thing, which is a 1x2, which I paid 37 cents, right? So I'm going to probably get 0 on that, and on the on this trade. So the other one I did was Kate. This is like a specialty retailer, like a higher end, and basically I was comfortable selling puts on it. Very similar to Macy's, but this one, to me, they were implying an 8.3% move, which was pretty big, and I thought that at least according to how I was thinking, that basically the downside was less likely to happen than the upside. So people were kind of betting on the upside on this stock. So I was willing to sell the put. So I sold these for 70 cents, and now basically I bought them 8.35. So I can get lucky and maybe make $2, but basically, I made 65 total on 65 cents total on this one. So in Macy's I made, John Deere or Deere Company I lost, and then Kate Spade I made. So overall I think it was pretty good. In terms of the earnings play stuff. So it's one of the things is, as the earnings winds down, sometimes, and not always, sometimes it gets easier just because you kind of seen the trend already, right? So you've seen a pattern, and then you have this underlying kind of belief in some company. So I know Kate Spade, not that I'm like some kind of fashionista. I don't really know anything about fashion really, but it seems like people do like this brand. Even though me personally, it seems kind of like it's overpriced. But anyway, that's just me. That's why I'm not, I probably shouldn't be rating these companies. And also, the company really didn't make any money. So a company like this always, to me, has a danger of really getting hit hard. But apparently, they're growing pretty rapidly. People like this stuff, so it is what it is. I'm just trying to trade to make money. So that's that. Also in HSH, Hillshire. Remember, I was pointing to all these call buying here. Looks like there's more buying here today, but let's see. Yeah, 50. So what I'm looking at is, you see this HSH June 2140 calls. There's 30 contract trade, 50 cents on SIBO. It was 40 bid at 50 at the time, 36 vol, and the underlying was 3660. So it traded on the offer, and when it does, it trades green. And when it trades on the bid, it goes red. And if it trades in between, it's in the middle. So usually if it trades on the offer, if it's green, that's buying. And it trades on the bid, it's selling. But a lot of times you have to actually go through this time and sales and kind of figure it out. So you see how in the morning they were just lifting the offer, right? So even just before people bought this, 45.50 was the market, and people lifted the 50 cents. And basically they exhausted the 50 offers, so he just put in 50-cent bid, which then somebody else came and hit. So even though this is red and traded on the bid, this to me is a buy, right? So people are still loading up on these calls. I'm not sure why people are loading up on the calls. Maybe to short stock, but in any case, like, I wanted to buy these, but I didn't want to pay for it, so I thought these were the 37s were an alright strike to sell. Why did I pick these month? Because in my mind, if these guys really thought that this move was going to happen in May, then they would have bought May. So most likely they're thinking it's going to happen after May expiration. There's no volume here, which is kind of telling me that this is going to be like a dead month, right? So I got a few days to go. It's not locked in yet. Maybe I might even buy these back. I did sell these May 37s. A lot of times I talk about, see how like May 37 put here? I bought them for 75 and I sold them for 115. So I was actually scalping in and out because they were so wide yesterday, right? and I'll just try to illustrate that even if you have, let's say your whole strategy is to sell X, you can always buy them back for cheaper and then sell them out again for a higher price again, right? So you can always work the order and try to supplement your income. But in Hillshire, for those of you guys who don't know the background story, basically they bought Pinnacle Foods. I think they do like Jimmy Dean sausage and stuff like that. Well, anyway, a lot of analysts didn't like it, but then you had this huge blocks of call buying right afterwards. So you see like here people are buying like 10,000 of the OC38s, and then people loaded up on the June 40s. And so you see the volume bars increasing, and all subsequently the volatility went up as well. So this is pretty high vol. As you guys know, like after earnings, the volatility comes down. But in this instance, basically it's still high. So I'm not really sure why they're buying it. I did hear something where maybe they thought Hillshire was a takeover candidate by itself. But in any case, the buying calls, I wanted to kind of buy with. Only because they were buying blocks of calls 2 days in a row. But if you look at this chart, it's not like it's screaming bullish, right? Let me actually. Sorry, portrait's not the right one. Landscape. Right. So it's not like this is like screaming like buy. Actually, all this movement usually is more bearish when you have all this like crazy movement like this. But anyway, but I want to buy it, so I paid 70 cents for the spread. See this thing, 31 cents and 48 cents. And now that spread, let's see what the spread is now, is basically around 27 cents. And then hopefully I'm kind of thinking like this will lose a little more value, but then this will go to zero in the next couple of days, and then I can actually maybe sell out of half. Then I would have actually gotten this 3 lot or whatever for credit. So if you guys kind of follow the my kind of like strategy. So I did this, I paid 17 cents, so net, by buying 5 of them, I laid out what, $85, right, to actually buy 5 of this call spread. If this thing expires to 0, I basically paid $85 for this. So if I sell enough contracts, let's say I sell 2, and it actually I collect $85, then the rest I just have it for free, right? So I'm basically have a free shot at the upside. Also, the other one was XLU. I don't know if you, I showed that little quick demo of, and I saved it now. So I was looking at landscape. Okay, so I was looking at this, which was 2000 market, and basically when people are rotating out of the high growth stocks and into safety stocks, utilities was like the main benefactor of it. So you see like this rise. So this thing went from March low when NASDAQ hit its high to actually hitting his high in December. So basically for almost a whole year, while the markets weren't doing well, so I'll do the NASDAQ here. So NASDAQ hit a high March and went down, right, to December. Down here, it's here, and then let me see SPX. SPX March was here, and then in December it was down here. And basically, throughout that whole time, the utilities was actually going higher and higher. So that being my assumption. So basically, if you guys don't believe in that assumption, then obviously, like this trade isn't going to be for you, right? But what I was thinking was I wanted to collect premium. So what I did was I did a 1x2. So September 38, June 43, 1x2, where I buy one set and one these, and I sell four June 43. So what I'm kind of hoping is that XLU doesn't go above 43. And then I'm gonna try to sell puts as well. Or I have a put offer working in XLU, but you see 14 cents. I'm probably not gonna get filled. I'm actually tempted to sell these puts, but you know it's 8 cents. Maybe even these puts. But there's like no reason. There's like no. It's not like order flow is telling me anything. There's nothing in here that's actually telling me I should do it, except for the fact that I'm doing it, right? So the reason I wanted to sell more was you see how the volatility was relatively high, and I wanted to be slightly long delta, which right now, because of my trades, I don't think I am in XLU, but let me actually see. Oh yeah, I am. I'm slightly long delta by 45. I would like to be a little more long. So you see how this gamma is 72. I'm gonna lose 72 deltas every time it goes up a buck. So basically, if XLU goes up another $1, I'm gonna be negative delta. And what I would like to do is have my delta maybe match my negative gamma. So if it goes up a buck, I'm basically still flat, right? So I'm trying to figure that out. Which one, I don't know. You know, let me see what this is. Yeah, so somebody sold these. I actually think I'm gonna sell one too. All right, so that's me right there at NASDAQ. We'll see if I get filled. So I'm gonna sell one lot there. Hopefully they'll get me, that's 25 delta, so I almost have to sell more, but that's maybe more than I'm willing to take the risk on, and then maybe I'll roll into this. Originally, I want to roll into this position, right? I want to sell 2 of these, so I want to sell the 39.43 strangle, and then have the 1x2 or a spread where I have the September 38, June 43 spread, and vice versa. So I'm, you know, as you guys know, I'm trying to figure out how to collect data and try to design it that way, like I did on the floor. I haven't been successful so far, but you know, I'm trying different things. So this is one of the things I like trying, because if I'm correct, and this XLU, you see the volatility is pretty low, and it has this let's say, let me go to weeklies. Actually, let me go to monthlies. So you see how this is 2014. If it does something like 2013, where it follows this little trend, right? So right now it's like on the high side, it's been bouncing between these two lines, right? The 7-month moving average and the 2 standard deviation Bollinger Band on the upside. So if this trend continues, which I'm hoping, I'm trying to collect premium every month to pay for some of the other options that I'm buying. So that's my premise. Whether it's going to work or not, I'm not sure. But essentially, what I was thinking was, and I have to check it with the margin, but I'm trying to make you know, between 5 and 10% return a month on what I'm investing. So if that's the case, then it's pretty good in terms of this XLU strategy. So if it works out well, I might actually increase it. One of the things with XLU is like it doesn't really trade that heavily, and it's pretty wide. So if something were to happen and you're trying to get out, you probably won't get out for a good price, right? I always see like some others too, like this one, the May 42s, right? You see how they were buying. Right, so they're buying these, the May 42 puts, So it makes it a little tougher just to just keep selling if the order flow is buying puts. And I think they're buying these two, June 42s, if I'm not mistaken. Yeah, they were kind of buying these June 42 puts as well this morning, and this one 70. It's hard to tell what this is, but looks like another 10,000 trade on these puts. So I'm kind of have to figure out if that's increasing the open interest, and I have to like basically keep that as a variable and put that into everything that I'm doing on trading, that people are buying puts. Now I haven't traded this too much, so if this is something that's normal where people come in periodically buying puts, that's normal. Let's say if you're dumping money into XLU, it's okay to buy some protection by buying these puts, but we'll see. So that's XLU for me. I also did this, and I kind of want to illustrate something. So yesterday, I sold out of my June 38 puts. So let me actually go so I can show you guys. Right, so I sold out of my June 38 puts. I bought these back for 8 cents. I don't know what I sold them for, but I basically bought them back for less than half, and now I'm selling these for 22 cents, June 38 puts, right? So I sold June 38 puts, or July 38 puts, I'm sorry. And this is like in line with like a strategy where I keep selling puts and calls on the indexes because they don't have this huge like event risk unless like there's some global event risk, right? So I was gonna sell some more calls, right? But yesterday there was like this huge amount of call buying in basically EEM. So like looks like this came in later, but yeah. So I'm telling you, there's call buying, and all people are doing is buying puts and selling calls. That's funny. But when I first looked at it, basically, when I was looking at it, people are buying all these calls. Like, so they were buying these calls, they were buying these calls. So they were buying a lot of calls, and then just these June calls too, like 45s. So it kind of spooked me. So I didn't sell any calls, but maybe I should sell some calls today. I'm not sure. I should check the chart. I'm trying to do a landscape so you guys can see. All right, so it looks like it's at the upper range of the Bollinger Band. This actually is probably a good time to sell. So I'm gonna actually try to sell some options right now. Okay, so EEM. So I'm going to try to sell 2-week out options. So what is that, 15? So May 30th is when I want to sell. More buying, selling. All right, so May 43 is 48 delta. All right, so I'm going to try to sell May 23. Okay. Sorry for the silence, but I'm actually trying to think. So it's been consolidating. Eventually, it's going to break out, right? Most likely, it's going to break out to the upside, which is something that I've been aware of. But let's say I'm going to sell one each. Right? So I'm going to sell one of these for 47. And I'm gonna sell one of these for 26. All right, so there you go. I'm gonna sell 2 more calls, and basically, if it keeps going up, and my July's, let's say, I'm just gonna put this in. Let's say like the way I would close it is like I would close at 11 cents, right? 11 cents is 36. So this would have to, EM would have to go up by $2 more in a very short time for me to close it for 11. Otherwise, I just have to wait it out like 2 weeks, right? So I'm gonna wait it out 2 weeks. And so basically, as you guys can see, I'm selling calls and puts separately, depending on where the chart is, and then I'm looking at volatility and order flow to kind of give me some heads up, right? So in terms of the volatility, like you see how like when it's really high like this, it's probably a good time to sell some puts. When it's low like this, I'm not sure, but maybe it's a good time to sell some calls, right? Maybe I should do like a big call spread, but as you know, when I look at the chart, it was kind of consolidating, so it wasn't like that obvious to sell calls. I'm a little weary, so as long as like not all the indicators are kind of pointing to what I want to, I'm more hesitant to kind of just execute it, right? So like the more analysis you do and everything you do kind of reinforces what you're thinking, the more likelihood that you would be aggressive. Less likelihood if people are betting the other way. So kind of like on this one, people are betting a lot of calls, so I'm less, you know, I'm pretty much less inclined to be aggressive seller of calls right now. But maybe this is the perfect time to sell calls. Who knows, right? But anyway, that's that. And as you know, like this volatility is pretty low, right? So if we look at the stats, it's at the bottom 4 percentile. So there's almost like a, you know, I'm almost like thinking like I should buy these back as soon as possible and not try to, there isn't that much premium in these, right? Less if it were higher. So if the volatility was higher, you probably have higher premium, right? So, you know, we'll see. We'll see how this goes. Let's see if I can actually do 44. Right, so if this is 22 vol, it's 20. If this volatility doubled to 44, basically it'll be a buck 23. So it'll increase by 5 times if the volatility goes up. And let's see, what's the highest it's been? Yeah, maybe around 25. So like, if this went to 25, and you're selling 25 vol, basically it will be 30 cents. It will be literally 50% more than it is now. So you see how like the 3 vol point change made that much of a difference? So its volatility is absolutely crucial. So imagine like when you sold it here, how much premium you were getting, right? You can even do some kind of spread. So like for those of you guys who do credit spread, that's kind of what I'm trying to say is like you should actually take volatility in account. Now, usually what I did, just so you guys might ask like, well, what didn't you do this before when you're on the floor? Yes, I did, but I would just sell. So like at this point, I would sell, and then I would buy like a chunk load of downside puts, right? So I'll buy like way out of the money put, a ton of them, and then just sell everything here and lean long, right? So basically, you know, if it goes up, then I make all that money. But I'm not, right now with the Reg T account, I have to actually like, I can't just sell naked because I won't be able to sell too many. So I have to like basically have a strategy where it's all packaged. So whether it's like a butterfly condor, you know, ratio spread, and I guess for me, I haven't perfected that yet. Okay, so where am I at? I'm EM. Okay, so that's EM. So I'm gonna keep testing it out. So if you look at my account, just so you guys know what the hell I'm talking about, you see this data, it's positive, and the gamma is positive, and that's kind of what I'm trying to do, right? So I'm gonna try to work this, trying to do it. This one isn't actually like, I'm not really long this much gamma. It's fake because I'm getting most of my gamma from Zynga. So if I take this out, it's more realistic of what I have. So let's say I take out the 600, then I'm only long 50 gamma, right? So I'm pretty much flat gamma, but I'm collecting every day, which is kind of what I want. So gamma means, just for you guys, it means how much your delta changes over the course of movement in the whole marketplace. So if you have positive gamma, the delta is moving in your favor. If you have negative gamma, it's moving against you. So normally, if you own options, you have positive gamma, because any kind of movement kind of works in your favor. If you're negative gamma, you're short options. So having this kind of position is almost an oxymoron, but you can actually achieve it if you sell high volatility options and buy low. So like by selling options that have earnings, usually that's a high vol, so you only have to sell a few of those, and then you can buy a lot in the back month or other low volatility options to pay for it. So that's kind of like my strategy right now, because I was trying to take shots at the beginning. It wasn't really working out too well. So that's that. So let's actually go to earnings. Advanced auto parts. So I'm going to give you, let's see, the stats. Okay, looks like most of it is selling. Maybe they know already what's going to happen. Let me actually see what the... So auto parts, oh yeah, it's implying a 6.1% move, and it moved 4.1%. So let me actually look at the chart. Stats. Yeah, so it looks like people don't think it's going to move, even though the vol's relatively high. The order flow is pretty limited. So even at this, it's nothing, right? Yeah, so to me, I guess it depends if I feel like gambling or not, right? Yeah, so it basically doesn't move. It's probably overpriced. It looks like 18 and then 25 is pretty much where it's probably going to go. Right, so maybe you can sell the 1530 strangle. Right, so I actually kind of like that, so I'm going to try that. Indeed, 140. Yeah, so I'm going to sell one for 140. And I'm thinking, I probably might lose like $5, so this will have to work more than 2 out of 3 times at this price for it to be really worth it. Right, so I just sent it, see if I get filled. If you look at the chart, it's actually gone down, the volatility, even though they have earnings tomorrow before market. Okay, YOKU. Okay, so YOKU, looks like I just sold it. So I'm going to write this down so I don't forget. So 5/14, I did AAP, May 17. I sold a 1 15, 130 strangle for $1.40. So good luck to me, right? YOKU, let's see. So YOKU, so I did a little reading because I didn't know what this company did. I found out they're kind of like the YouTube of like China, right? Look at all these calls that are being traded. Most of these are bought on the ask, but as you can see, they're not really out of the money that they're interested in, more like just this one strike, May 22s, right? This one only. So I was thinking, kind of like with Staples. Remember Staples? People are buying these May 13th, and by the time I saw it, I pretty much noticed I'm not going to be able to get in for 20. So I did the spread for 80 cents, and if Staples stayed the same, I would have made money, a 25% return within like 4 or 5 days, or I was risking maybe twice that much in losses, right? So my out point would have been like 12.40. So I would have lost 40 cents. So it would have had to work more than 2 to 1 for that to work, and I was willing to take that chance, right? In YOKU, same thing. I don't think I'm going to get it for 50 cents. I was actually working this trade. This trade right here. Let me see if I can actually... Right, so basically I'm willing to pay 50 cents for this trade, and I haven't gotten filled yet. I also, while doing that, I was trying to sell the put spread for 60. So basically, for those of you guys watching this, if you buy the call spread for 50, or if you sell the put spread for 50, it's the same thing, right? Basically, you're risking 50 to make 50. The reason it's the same, and that's why the relationship between the calls and puts are constant in terms of volatility, is because there's a mathematical relationship between it. So even if people are just buying calls and the volatility in calls go up, the puts also go up as well in tandem. It's not like just the calls go up and the puts don't, because there's an arb opportunity. So if I'm trying to pay 50, I was just trying to double my odds by actually selling this for 50 as well. But it hasn't worked out yet. So I'm gonna still try to pay 50 cents for the spread. If I'm lucky, I'll get it. If not, then I'll just have to move on to the next one. But basically, it seems like people love this one strike. So I was like, right? So they're betting heavily on this one strike right here. Maybe if it goes, to 23 bucks, basically they'll double that money, right? If it goes like 24, 25, that's when you really make some big strides. But this is kind of unusual. I was checking prior earnings, and just to check out the order flow. And this past earnings, so the one prior to this one, there wasn't much. But the one before that, you see this like huge green bar. Basically, people were buying a lot of calls. These are customer opening orders. And there was very heavy call buying. And the next day, it was up $3, 11%. So it is what it is. I'm not trying to say like that's what's going to happen here, but it was interesting to me just because people were buying these, and it looks like now they're selling 25. So they like the 22, 25 call spread, right? Maybe another thing I can do is buy one of these and sell 2 of these, but then that could work. But to me, like just in general, these are I'm just trying to get it for 50, and my bet is that if YOKU trades 21.50 or higher, I basically break even, and if it goes above 22, I make money, right? So I'm risking 50 to make 50, but actually the stock can go down roughly 2%, maybe like 1.7%, and I'll still break even. But we'll see what happens. So I have that in there. Not sure if I'm going to get filled, but we'll see. Walmart. So this is probably the biggest one people are waiting for. They're implying a 2.3% move and basically moved 1.6%. So normally it doesn't move that much, but you know, maybe it might this time around. As you guys can see, they're not actually buying too many Mays. They're kind of buying Junes. They're selling all the Mays, right? So if anything, if they're selling May 72 puts and May 79 calls, let me actually see this. So I would think this stock is going to be within 76 and 80. 76 and 80. And even June's, it's only $1. So yeah, I don't really know. It doesn't seem like that great of a. Maybe I can take my chances and do May's 76 and 80, but you know, what am I doing? I'm basically trading an $80 stock, and I might make 35 cents if I sell one contract, right? So to me, like, those don't seem that great, even though most likely that's going to be a winner, but it's not really that great of a trade. So you know, that's that. So as you guys know, I made money on Macy's, on Kate, lost money in Deere, and then today I'm trying to put on some trade in. Oh, I did put on a trade in AAP, selling that Strangle, May 17 expiring 115, 130 Strangle for $1.40, and then the other one is this YOKU. I'm trying to buy the call spread, or sell the put spread, but not sure if I'm going to get filled. Other than that, take care. Hope your trading goes well, and I will talk to you guys tomorrow.